What is up? Welcome back to another video. In this video, I'm going to be teaching you one of my favorite strategies and one of the most consistent ICT day trading strategies, which is the ICT Silver Bullet. Now, this trade appears absolutely every single day in the markets. There are three different times of the day that you can trade this trading strategy, and that is New York time. So the three different times that you can trade this strategy are 3 a.m. till 4 a.m. UTC -5. You have 10 a.m. till 11 a.m. and then you have 2 p.m. till 3 p.m. Now this is all New York time. So UTC -5. Okay, so this is a time that you can trade the ICT Silver Bullet. Now this trading strategy is very mechanical. So what I mean by that is it is very easy to understand and very easy to find and very easy to learn when you are trading. So by the end of the video, even if you've never heard of the ICT strategy, or even if you have heard about the ICT strategy and you just want to improve it, this is definitely an amazing consistent strategy that if you master, you can always get funded with just this strategy alone and be very profitable with just this trading strategy alone. So now that you have your first steps, okay, so this is very important. You must trade only in this time frame, okay. I get a lot of DMs saying, oh, the ICT Silver Bullet isn't working. First of all, make sure your time frame is set to UTC -5. It must be New York time zone that you are reading this charts, okay. So it must be 3 a.m. till 4 a.m. that is the London session. Then you have 10 a.m. till 11 a.m. that is a New York morning session. And then you have 2 p.m. till 3 p.m. that is the New York PM session, okay. So these are the only times that you can trade this specific model. If you're taking this model and outside of these time frames and it's not working, then purely the reason is because it is not in the right time frame, and therefore you won't make any money with the strategy, okay. So that is the first strategy that you need to know. Now the first step for the actual trading strategy is you need to know and be able to identify displacement, okay. All displacement is a large candle that is moving in a specific direction. So it's not, doesn't have to be too big, it just has to be a candle, preferably that has took liquidity before, that is just moving in the direction that you want your silver bullet to be. So before we move on and actually talk about displacement, I'm actually going to tell you how to identify which way you want to be taking the silver bullet trade, whether this be a long position or a short position, okay. So you need to be targeting opposing liquidity, okay. So what I mean by that is, as you can see today, for example, we have just been trending up and up and up. We have only been taking buy stops. We've only been taking buy side liquidity. If you're unsure what buy side liquidity means, all that is just a swing high. So we have just been breaking structure to the upside. We have just been taking lots of liquidity to the upside. Therefore, our silver bullet will be a short today. We will not be interested in any longs, okay. We'll only be in looking for a short. So that is how we find our silver bullet. As you can see, we've just been trending up, taking lots of buy side. Therefore, from 2 p.m. till 3 p.m. in this example, we will only be looking for silver bullet shorts. Okay, so what we're going to do next is mark out the time. So as you can see, we have 2 p.m. here. Let me just make this darker for you so you can see it. That's 2 p.m. there, and then 3 p.m. is right here. Okay, so this is, in this time frame is where we can take the silver bullet short, and as you can see, coincidentally, that is where the reversals happened. Okay, so now that you have your opposing liquidity, you need to look for displacement. Now, I'll briefly explain displacement, okay? And all it is just a larger candle that would mainly create a fair value gap, okay? Now, that's your third step. It is identify fair value gap. Now, if you're unsure what a fair value gap is, all a fair value gap is a 3 candlestick pattern, okay? So as you can see right here, we have 1, 2, 3 candles, right? So here we have 3 candles. So focus on these 3 candles right here. 1, 2, 3. Focus on these 3 candles, this bullish candle, and then these 2 bearish candles. As you can see, the first candle and the third candle cannot touch. Okay, they can't touch. That can't be wicks. That can't be bodies. Nothing in this candle can touch. With each other. So this first candle here, where I'm starting the box, and then the second candle, the third candle there, can't be touching. So the second candle in the middle has to be free on its own. The candle to the left and the candle to the right cannot be touching or overlapping. That can be wicks, that can be bodies. No matter what, it just can't be touching at all. Okay, and that is a fair value gap. So you draw a box on that fair value gap and drag the fair value gap out. Okay, and again, if you are confused about what liquidity is, I'll quickly explain that for you. So there are 3 types of liquidity. Okay, you have trendline liquidity, which is pretty self-explanatory. It is just when you have a clear trend line and there is lots of liquidity sitting in that trend line. Okay, so for example here, there'll be lots of sell side liquidity all below this trend line right here, because retail traders will be entering long positions off of a touch of this trend line. Therefore, there'll be lots of short positions all below here. Okay, so that is the first type of liquidity. Then you have swing highs and swing lows, which is where we will find our take profit and stop loss with the silver bullet strategy. So let's say we have price action like this. So right here, there it will be liquidity here. This would be called a swing low. There would be liquidity here. That would be a swing high. That would be a buy side liquidity. This would be sell side liquidity. So all liquidity is literally just where buy stops and sell stops rest on the market. And then the final type of liquidity, which is my favorite, is actually equal highs and equal lows. Okay, so let's say price comes to the same point in the market more than once, so it came here, and as you can see it's at the exact same point. So these are equal highs until price will come back up and sweep those equal highs. Then that is the liquidity taken and liquidity swept. Okay, so that is the different type of liquidity. So here, for example, if we go to replay mode, as you can see, we're on a 5-minute time frame right now. We have our displacement down, so this would be our silver bullet fair value gap. So what a lot of people would do here is enter a short position right here. And yes, that is correct. You could target down here. I would target right here, the sell side liquidity. And as you can see, the silver bullet short stop loss would be at the swing high, take profit down here. As you can see, nice 1 to 1.5 risk to reward ratio, and this trade works perfectly, as you can see. But what I like to personally do is, and this is not the silver bullet trade, okay? That what I just showed you is the silver bullet trade. But right now I'm going to just show you a bit more of an advanced strategy. So what I actually do, and what is a bit more advanced than the ICT Silver Bullet trade itself, is I actually look for lower time frame confirmation. Okay, so as we can see right here, we are, let me just go into replay mode. As you can see right here, we are respecting this 5-minute fair value gap very nicely, okay? So therefore, what I would do is I would jump to the 1-minute time frame, and as you can see, we have this 1-minute bullish fair value gap, and knowing that we have this 1-minute bullish fair value gap and our high time frame is showing us that we want to go down, what we can do with that is we can use this bullish fair value gap as an inversion fair value gap. Now, all that means is as soon as this fair value gap is disrespected, we can expect that the fair value gap will give us some type of sell side liquidity. Okay, so we have this 1-minute bullish fair value gap. As you can see, we play at the price action. Boom, right there, this fair value gap has been disrespected. Therefore, it turns into an inversion fair value gap model. I would enter my trade right there. My take profit would be at the swing low right here. And we play at the price action, and boom, perfectly takes profit right there. And that is actually the trade I took. I didn't take the silver bullet short, although it did work. So this is just a more advanced strategy that you can use pairing it up with the ICT Silver Bullet. But as I said before, I've already explained to you that this was the ICT Silver Bullet trade, so you would have entered a short there, and your take profit could have been down here, or potentially lower, because this is still live price action. As you can see, that low got hit. And yeah, so I hope this video helped on ICT Silver Bullet, and I could quickly explain the inversion model. Remember, if you want to join my free Discord, the link is in the description. I trade live every single day. We're nearly at 400 members in the Discord. So yeah, thanks everyone for watching.